Gold, an asset that has long served as a cornerstone of the global financial system, is once again capturing significant attention from investors and market observers. While central banks have traditionally been the primary drivers of demand, a new class of big players is quietly entering the market, accumulating substantial reserves and creating fresh dynamics that could have profound implications for its future price trajectory. This emerging trend, driven by a confluence of technological innovation and strategic diversification, signals a structural shift in the gold market, raising questions about whether we are on the cusp of a sustained upward movement in its valuation. The initial signs of this shift are emerging from unexpected corners of the world, where smaller nations are pioneering innovative methods to integrate gold into the digital economy. Take, for example, the Himalayan kingdom of Bhutan. In a move that bridges traditional value with modern financial technology, Bhutan has launched a gold-backed digital asset known as the Tokenized Escrow Receipt, or TER. This digital instrument is fully collateralized, with each token representing ownership of physical gold held in secure reserves.
Wow.
Distributed through the DKBank digital platform and built on the Solana blockchain.
Wow.
The TR aims to provide investors with a transparent, efficient, and low-cost mechanism for gold ownership. This initiative is not merely a technological experiment. It represents a strategic decision to leverage the country's gold reserves to enhance financial venture inclusion and create a more liquid, accessible market for a traditionally illiquid asset, by tokenizing its gold. Bhutan is effectively democratizing access to a safe haven asset while positioning itself at the forefront of digital finance. A similar trend is unfolding in Central Asia, where the Republic of Kyrgyzstan is actively testing its own gold-backed digital currency. The government has initiated a pilot program for a digital token pegged to the US dollar. It's known as USDKG, which is collateralized by the nation's gold reserves. The initial issuance is valued at approximately $50 million and is being launched on the Tron blockchain, a platform selected for its high transaction speeds and low fees. The plan includes future expansion to other prominent blockchain networks such as Ethereum to broaden its accessibility and appeal to a wider user base. To build market confidence and ensure the integrity of the project, rigorous audits of the underlying gold reserves are already underway. This move by the Kyrgyz government underscores a growing recognition among emerging economies that sovereign gold holdings can be deployed in innovative ways to stabilize their financial systems and participate more actively in the evolving global digital economy. The ambitions of the Kyrgyz government extend far beyond the initial pilot phase, signaling a long-term strategic commitment to this gold-backed digital framework. The government has announced an aggressive plan to substantially increase the gold reserves backing the USDKG token. The immediate goal is to expand the reserve base from the initial $50 million to $500 million. With a long-term target of reaching $2 billion, this significant scaling effort reflects a deep-seated belief in the strategic value of gold as a monetary anchor in an increasingly uncertain financial landscape. To support this vision, Kirgistan has already been actively increasing its national gold reserves. Through domestic purchases and international acquisitions, this strong sovereign backing provides a powerful signal to the market, demonstrating the government's unwavering commitment to the stability and long-term viability of its digital currency initiative. It is a clear indication that for some nations, gold is not just a passive store of value, but a dynamic tool for monetary policy and economic development in the 21st century. However, this renewed interest in gold is not confined to sovereign actors. The private sector, particularly players from the rapidly growing digital asset space, is also making significant inroads into the physical gold market. A prominent example is Tether, the issuer of the world's largest stablecoin, USDT. While renowned for its dollar-pegged token, Tether has quietly become a major force in the gold market through its gold-backed cryptocurrency, XAU. To support this token, and as part of a broader investment strategy, the company has accumulated a substantial hoard of physical gold. Current estimates suggest that Tether's holdings are approximately 116 tons, valued at around $14 billion. This dual-purpose accumulation, partly to back its digital gold token and partly as a strategic investment to diversify its own corporate reserves, highlights it's a new and powerful source of demand. The entry of well-capitalized fintech giants like Tether introduces a new layer of institutional buying that operates outside the traditional channels of central banks and exchange-traded funds (ETFs). The emergence of these new players, from innovative nation-states to powerful non-bank financial institutions, is fundamentally reshaping the structure of the global gold market. For decades, demand was primarily driven by a few key segments: central banks seeking to diversify their foreign reserves, institutional investors using ETFs for portfolio allocation, the jewelry industry, and industrial applications. The rise of tech finance introduces a new, multifaceted layer of demand. This trend is part of a broader global movement toward the diversification of national reserves away from a singular reliance on the US dollar, and a deeper integration of blockchain technology into mainstream finance. These new participants are not just buying gold, they're creating new financial instruments and ecosystems built upon it, thereby expanding its utility and appeal in the digital age. The growing popularity of digital gold lies in its unique ability to fuse the timeless, tangible value of physical bullion with the speed, liquidity, and accessibility of digital assets. This hybrid nature makes it particularly appealing in the current global environment, which is characterized by heightened geopolitical risk, persistent uncertainty regarding the future path of interest rate policies, and a concerted push by several major economies toward de-dollarization. In a world where traditional financial systems face increasing strain and fiat currencies are subject to inflationary pressures, gold-backed digital tokens offer a compelling alternative. They provide a transparent and verifiable claim on a real-world asset while enabling near-instantaneous, low-cost transactions across borders, effectively modernizing gold for a new generation of investors and a new era of finance. Market analysts are increasingly connecting this recent wave of accumulation by these new big players to the underlying strength and resilience of gold prices. The trend gains further momentum from the macroeconomic backdrop, particularly the evolving stance of the U.S. Federal Reserve. With signals pointing toward potential interest rate cuts and a return to more accommodative monetary policy, the investment case for non-yielding assets like gold is significantly bolstered. As the opportunity cost of holding gold decreases, its appeal as a defensive asset and a store of value naturally increases. The confluence of a potentially weakening US dollar, persistent de-dollarization efforts by major Eastern economic blocs, and escalating political and military tensions around the globe creates a powerful cocktail of factors that are likely to keep gold at the center of the global financial narrative. While the explosive price gains seen in the past may not be replicated, the structural shifts in demand, driven by these new market participants, suggest that the forces supporting gold's valuation are becoming more diverse and deeply entrenched. The future trajectory of gold prices may be more moderate, but the foundation for its continued relevance appears stronger than ever.